Good morning, good morning. Make sure the stream's going. Here we go. Good morning, Predicted Trades family. I hope everybody's doing well. I hope everybody had a fun FOMC yesterday. We definitely crushed some calls and puts around FOMC. I know some folks held both, made money on both. We definitely nailed this upside after it settled and held key levels. So on ES, the key level was 37.41. It wicked slightly below it here and there, but really never closed a candle on any significant time frame below this 37.41 key level. So that was our signal that we're holding. We can go up and see new highs on the day. And, let's just strip away some of my studies, and you'll see key levels, very important. We held that 37.41, high of day, right at a key level, 38.43.25. In fact, let's see, the high was 43. Okay, so it did reach 75 cents over that. But key levels, and here we are, right back at another. This was the new low of year. Now we've got one a hair lower in the overnight. But trying to hold and push off of low of year. So definitely go ahead and mark that new one just in case. Excuse me. I do have an old POC as well that is at this 36.68. Should we start to give out this overnight low and new low of year of 36.95. Let's see, we do still have a 4-hour squeeze in place. Let me get all my studies back on here so we can start talking to those. So, overall we were in a boatload of squeezes yesterday, which made it harder to really get going to the upside. But now a lot of those squeezes have opened up and fired. Looks like it's saying this 2-hour just opened up and fired to the downside, but we know how things can fire and then reverse immediately. And when we have our nice little squeeze clouds in place, this is the 2-hour. You can see it opened up and stopped. And we're already back above the bottom of that squeeze, which pretty much perfectly aligned with this 37.08 when it disappeared. So we still have this 4-hour squeeze bottom that we are opening near. And as we all know, 4-hour squeezes can be great for reversals. We also have this 2-day squeeze that we've pretty much been holding the bottom of, and it's still intact. So not going to be afraid to play the upside, especially when we're opening near this previous low of year and we have this 4-hour squeeze bottom. Wouldn't be surprised for a quick retest of these things to see if they can hold. So looking for the squeeze bottom and 36.95 new low to hold. If it slips outside of the squeeze bottom, it can tap this POC and get right back up in. But overall, looking for a reversal off this 4-hour squeeze bottom to head back to the top. We got our FOMC data yesterday. It was right in line with what the market priced in. So there really shouldn't be any cause for more downside. Unless they just want to continue. Continuation of the sell-off. But in a way, this sell-off was to price in that 0.75 hike, because what had previously been priced in was a 0.5 hike at every meeting, right? So this move was, from what we can measure around the market, was to price in that 0.75. We got it. So we can move higher, technically, before we head lower, since we are right down near our third Keltner down, which is when we're starting to look a little oversold. So overall, looking for things to base here, at least head back up to the daily 8, which is now pretty much caught up with yesterday's high. Just a slight reach outside of it, we'll be testing the daily 8. So looking for us to base, head up to the daily 8, maybe even in a, since we have Thursday, Friday left, maybe even get back to the 21, but it is OPEX week. And look, we are in a range. So we have gone from the top of the range to the bottom. I'm looking to get a little long to get back to the top of the range because we can just stay here this week for OPEX. But then after OPEX, I am definitely looking for a potential reversion to the mean because we do have our shop split, our Google split, our Tesla split. We're getting a little oversold, so we have reasons to head back up before we go back down. So for today, using pre-market high and low and these squeeze clouds to risk off of back and forth, watching my key levels for inflection. And yeah, we've got targets to the upside, targets to the downside. Play the range until it breaks. NQ. All going to be very similar until we start getting to individual names. NQ led to the downside just a little bit. So let's see if they're just rotating around. Maybe if we do see some upside, we might see YM get the upside first before NQ, since it's still down the furthest. But overall, looking for it to base around this 11,300. As always, as I've mentioned a few times, we can reach outside of these squeezes to hit 11,000 and still get back inside them. 11,000 big key level, psychological, and just as far as how far we've fallen off of the top. 11,000 is, I can't remember the measurement right now, but it's kind of in line with how far COVID was or something along those lines. Forgive me. But ultimately, if we lose this to the downside, we have third Keltner down at that 841. This 11,000 very key level. So looking for a base here to start heading back up. And yeah, we've got our pre-market high and low and the squeeze clouds to play with. Would really like NQ to stay above these squeeze clouds, above this 200 basically. Ready. Oh, interesting. So Ready technically did not fire its 2 hour to the downside, even though it looks very similar to the others. But let's see. And yeah, basically just like the others looking for the squeeze bottom to hold, we have these 2-day squeezes sitting down at the lows, trying to help prop us up. So looking for the Ready to hold 1680. If it starts to give out and fire this 2 hour to the downside, well, this 2 hour or 4 hour, third Keltner down at 1635 is the target if we go further down. If we can hold 1680, looking for us to get back above 1700 and to go test 1760 in the daily 8 right here. Might be the first index to get back to it today, so something to keep an eye on. NYM, same deal. The daily 8 has caught up with the Keltner above us and the top of this squeeze. We're holding the bottom of this squeeze and we're, wow, look at that. We're tapping on the door of 30,000. Big key psychological level for YM in the Dow. And we already got there pre-market, 22 points off. So let's see if they want to test and tap it while we're here, or if that was good enough, if we can hold these squeeze bottoms, not quite retest pre-market low, and head on up back above 300, this 2-day squeeze, and in a bid to get back to the 4-hour squeeze top at 31,000. That would be a 1,000-point move today after about that much of a drop. So, you know, we'll have to see. It is kind of an expanding bullhorn. So as long as we can hold these 4-hour squeezes and we have buyers present today, we can see that upside to fill the gap, because we know how SPX loves to fill gaps, and now it pretty much spans the entirety of yesterday. So let's see if we get, let's see if these squeeze bottoms can hold. If not, and we lose 30,000, psychological 2960, I'm sorry, not, if we lose the psychological 30,000, we have the next Keltner down, 29,611. All right, let's move on to Apple. I'm going to burn through these names as quickly as I can. Key levels, key levels. Apple could not get to 138 yesterday. We are back at our 131 and 132.6. We already hit basically that 131, 20 cents off. And now we're back above that 132.6. Just saying, if we are going to have a reversion to the mean, they love to do this. Look like we're going, reset, just to pick everything back up and make the move, right? So let's see if the 4-hour squeeze bottom can hold. Oh, okay, sorry, 2-hour is the one we can see here. The 4-hour is just starting, and it doesn't look like we have a top. So let's see if this 131 can hold. It's been doing a good job all week. We never really even tested it before buyers kept stepping in. And now we definitely see some buyers stepping in as we got near it. So let's see if we want to go back and retest it. Looking for it to hold, or if 132.6 can hold us, send us back to yesterday's high and overnight at the 137 basically, in a bid to get back to our zone above at 138, where the daily 8 and the next Keltner sit. If we fire to the downside, lose those two key levels, third Keltner and this 127.30 basically, we can call it, are down below. AMD. Definitely saw some nice movement yesterday. Struggled at that key level. Back down at squeeze bottoms if they can hold. And we're, is it second Keltner? Yeah, okay. So if we can hold this 85, we can head back up to test 89 and 90. If we lose 85, going down to this 2-day squeeze bottom and the third Keltner, which is down at 80, big psychological level. If we can get through 90, we've got the moving averages that are slowly moving down, and probably going to be settling around 93 and, up to about 96. Amazon. Starting to wake up, right? Gap down, not so bad. It's actually going to be opening slightly higher than yesterday. So let's see if Amazon can continue to hold 104, where it kind of parked that pre-market low, in a bid to get back to that 108 and 110, where the daily 8 will be stepping down to. If it gives out pre-market low, likely going back to yesterday's pre-market low and Tuesday's low around that 101 and psychological 100, where some squeeze bottoms are sitting. I'm not going to cover BA, but that news was good. Got it all the way back to the mean. Let's see if it's going to hold. If it does and spells more upside, it can definitely help the market and YM. Cat. Ooh. Cat. Just hugging that daily 200 MA that we talked about, and now stepping down to 200 and the squeeze bottom. So definitely looking a little weaker, but this is where they love to load Cat. We go back and look. Last time it was near these levels, 194, where this old POC sits, and 200, where it last bounced. We get to 232, and our key level above at 227.92. Now I could have levels in between these two, but I don't need to because I have all the tools to help. And those are the key levels that we have been bouncing between. So, might be a good watch to keep an eye on Cat, especially maybe moving into next week. Start watching next week's calls with Beast. And you might find if we slip down and test 200, 197, 193, or I'm sorry, 194. If we can hold that zone, might be just another long opportunity in Cat. In fact, we are approaching OpX. So it might even be worth looking at next month's Cats. Just a heads up there. But Cat looking weak, and if BA starts to give out after looking strong, it will definitely drag YM down. Google. Holding at a key level, right back at it. It has a split a month away, and we are on an OpX week. So keep an eye, folks. Google could have an epic run, especially after this week. Moving into next month's contracts, and they're holding it at key levels. Last time it bounced at these levels, it got up to about that, just call it 2400. Back at these key levels with a split coming. So Google today looking for these to hold 2100. We can slip as low as 2050 and stay in this 2-day squeeze. And 2050 was the last kind of bounce point. It's 2100 and 2050 is the major zone. And I marked some key levels around it. So well, let's see if they just keep Google here while they're loading up calls for next week, next month, yada yada. But yeah, could even start to wake up today and tomorrow, get back to the mean pretty easily, and start setting up a run. So it's worth keeping an eye on it. GS. Not a huge interest, but looks like it's at least kind of trading in an upward channel. Let's see if it can hold 2-day squeeze bottom. At least hold this 280 and start making its way back up to the daily 8 and Keltner above, which are sitting right under 300. JPM. Same thing. Actually, JPM's more in a down channel. But we are at third Keltner and 2-day squeeze bottom, so there could be some longs getting ready to load up for a reversion to the mean. So look for it to hold that 112, basically, and 113. Meta. Not a huge interest here at all, frankly. 160, 170, the range she's in. And that's where the for 2-hour squeeze is now lining up. So if she gets near 160, play her long to 170. If she gets near 170, play her short back. Microsoft. Opening up most of its squeezes. Got our 2-hour pretty wide. So let's see if it can continue to hold pre-market low 243, 244. And this 2-day squeeze bottom, and start heading back up to yesterday's highs and this daily Keltner and the daily 8, which are going to be coming in right around this 254 today. Netflix. Actually, streamers woke up yesterday and were pretty strong out the gate. As far as leaders yesterday, we saw some rotation into streamers into e-com with Amazon and Shop, into Tesla, which has been strong for a couple of days. So the names that led yesterday, if we are going to have more upside, and need to step in and lead today. Netflix only gapping down about halfway of yesterday's movement. So let's see if it can hold pre-market low. You can see that it stopped at the trend line I drew from these two highs. I think I drew that actually yesterday in prep. In fact, yesterday's thesis was if it can hold these squeeze bottoms and this Keltner, it can get up to trend line in the daily 8, and it did it. So hopefully folks are listening during prep. So Netflix, if it can hold a pre-market bottom or pre-market low, we can head back up to test these highs and that daily 8 again. If we give out pre-market low, we're going back to that Keltner below and where we started the day. Nvidia. You know, they were kind of boring, but then after FOMC, they did rotate into them a little, back down. I don't know. Chip's not looking the strongest. In fact, gapping down below where they opened yesterday. So they may want to let them settle and pick them up here again. But basically, if we can hold 155, and really maybe even just pre-market low 157.5, we can head back up to test yesterday's highs, 167. In a bit to get back to the daily 8, which is settling at about 170, 169 maybe. QQQ. Let's speed this up. Two-day squeeze is still intact. We've got our 4-hour squeeze kind of around that. So on QQQ, like most things, looking for that pre-market to hold around 274 to send us higher through 280 and back to 285. So on QQQ today, downside, going to be watching the 270s for tomorrow's expiration, 268s. Upside, going to be watching the 280s, 282s, probably 285s. And we're in a range, folks. Just keep in mind, OPEX week, right? We have not really gone anywhere. So, play this range until it breaks, downside, upside, yada yada. Roku had a day yesterday. Like I said, streamers did get some love and tried to lead. And we had that nice stack of squeezes down there to play off of. I know it's a little hard to see, but looks like we held this, what is it, daily? Yeah. So we held the daily, bounced off of it, took off through the first Keltner and made it back to the daily 8. Now it looks like we're kind of hugging that low that we bounced at and where that Keltner will be opening today. So let's see if that 78, 79 can hold that daily Keltner, send us back up through the daily 8 to the 21. If we give out that Keltner, likely coming back to the 76, 74 for them to potentially load up again. Shop. Ooh, shop. We've been playing her a couple of days now, hitting these 350s. Maybe even these 330s, a couple of folks hit. But basically we went long off of 300. She's been making a nice move yesterday. Trying to hold 310 this morning. So let's see if it can hold. Send us back through yesterday's high around 330. In a bid to get back to the daily 8 at 340. And POC, which is right at 348, 350. So we've got some nice magnets above. We've got the catalyst that she has a split in less than 2 weeks. So, let's see if they just keep loading her. SPX filled the gap yesterday to the downside after FOMC. Pretty much held the gap into FOMC, then filled it, then went higher, and stopped at Monday's gap. I'm going to be gapping down. So let's see if, what are we at? 73 points. So I'm going to be opening around 3,700, 3,710. 3,715 maybe. So that'll put us near where the squeeze bottom was. So we'll be gapping down at a squeeze bottom. Hourly squeeze bottom. As long as that squeeze bottom can hold and these lows of the week during the cash session can hold, we can go back filling the gap and potentially even fire the squeeze to the upside. Technically, we could even get back to this daily 8 today because we closed at 89. That would be about an ATR move up to here, and we are, gapping down. So filling the gap plus an ATR can happen. If we got buyers, we gotta have buyers today. SPY at the bottom of the squeeze, looking for that 369, 368 to hold, and 370 obviously. And send us higher through 375, 380, and back to the highs yesterday at 384, where the squeeze top is now. So just like everything else, and we are at that third Keltner pretty much, and bouncing this morning. So looking for the upside. If she breaks down, we'll be moving past third Keltner, folks. But basically, you'd want to keep your eyes on that 365. I'm just going to skip to Tesla and VIX so we can wrap this up. Tesla, 657, that key level. Once it got above it, it likes to move and come back and hold it. It gave you a dip right to it yesterday, that key zone. Nice dip to it, and she rocked on up to 700. We were still playing those 730s and 700s again yesterday, provided great opportunity. Gap down, not all the way back at yesterday's lows like a lot of things, so still some relative strength in streamers and in Tesla. Let's see if 670 can hold us. That last bounce point, giving us a nice low that we're trying to settle at. So let's see if that can hold or pre-market low can hold and send us right back to 700. And this squeeze top at 710. We did make it to the daily 8 yesterday, struggled at it, but got through it and closed above it, turning it into support. So if we can reclaim it, we can make it support again to go test this daily 15, which will be at this squeeze top. And at our big key level of 718, in fact, the daily 21 is about to step there. So we could have a reversion to the mean today on Tesla. Keep an eye. It was a leader yesterday. It needs to lead. If it gives out pre-market low, definitely going back to this zone, looking for that to hold. If that can't, squeeze bottom, 630, 640. And our Keltner at 625-ish. And VIX. VIX yesterday not only filled the gap to the upside. Oh, sorry, that's the opening gap. Never mind that. Gap down into this big gap over the weekend, right? Kind of just sat in it, shot up to a trendline rejection during that FOMC stuff, and then she just died all the way back to the daily moving averages, the daily 8 and daily 21, and filled the gap officially. So VIX filled the gap, can go higher, also reverted to the mean. So we get, a lot of things are leading to this gap down that we're having. Overall, if VIX is going to head higher off of this mean reversion and gap fill, it has to take out 33.5 and it has to get to 35.3, where that big daily squeeze sorry, 2-day squeeze top sits. But if VIX cannot get going through pre-market highs and through 32.5, it's not going to make it to these and can roll back over to fill this gap, get back to these moving averages, and settle at our key levels here. So if we're going to get more upside today, VIX needs to stay under pre-market highs and 32.5 and roll back over, filling the gap to test yesterday's lows and these key levels. If the market's just going to continue down off of this gap down, VIX has to get up and test these bad boys up above. So hopefully that was helpful. Thank you all for tuning in today. If you're new and in the free section, we'll be in your area today with our whole crew so you can see what it's like. And I already dropped today's Beast tool in the free section, so definitely pick that up. But thank you all for tuning in. We'll see you in chat. If you're new, come join our server. There's a link in the description of this video. There's also a link at our website. You can join for free and test out our system. Every Thursday we go live. So come check us out.